It wasn't that long ago when coronavirus was just making headlines and nobody really thought it was that big of a deal. I didn't think it was that big of a deal. Maybe you did, or maybe some of the more astute people sold their stocks, maybe bought put options, got in the put train. But there's a fine line between being astute and being paranoid. So making that decision is very difficult, especially for a long-term investor. But what about us traders? What are we supposed to be doing right now? As things went from there's a germ over in China to manufacturing facilities are being shut down and entities along the supply chain are getting caught up in this business. In other words, the entities that get the resources from the earth and pass it along to processing facilities, to manufacturers, to wholesalers, to retailers, and finally get this product to the customer, all those entities in that supply chain were getting shut down or less man hours were being involved. And that is going to have a direct economic impact on the surrounding area and also whoever they trade with. So it's no surprise as things started to become apparent that we're going to have a negative economic shock that the stock market started, collapsing. And things have only gotten wilder from there. I mean, back then, and I say that was not that long ago, but back then it was just some facilities were getting shut down, and now entire countries are being quarantined and people are not going into work and being told to stay home. And in my small little town that I live in, I'm not going to tell you where it is, but my small little town, the shelves are just stripped bare. It's crazy. And this is only going to amplify the negative economic impact of coronavirus because there's going to be less money that people are spending. And there's going to be less time spent at work being productive. And this can cause a decline in GDP and the growth of GDP, which could enter us into a recession. And the evidence is quite frankly mounting that we are going to be pushed into a recession regardless of the desperate attempts from the Fed and Trump's administration to soften the economic blow that coronavirus is going to have. So what does that mean for us? Well, for me, I'm a 24-year-old guy who is a trading enthusiast who has never traded ever in a trading environment like this. Like, this is bananas. The swings are crazy. And usually volatility is good for trading. But in my opinion, right now, trading is not trading as usual. A month ago, if SPY swung 3 or 4%, everyone would be freaking out. It's the biggest move ever. Now that seems to have become below the average. Okay, well, some of you geniuses out there might be saying, you big dingle dongleberry, it's going down. It's so easy to see that it's going down. I'm looking over here at my computer. It's a straight line down. Why not just buy puts? Why not short? Well, you are a genius, but imagine the people who bought a bunch of puts on March 12th. That maybe expired on March 20th or even a little bit later. Who cares? They bought a bunch of puts on March 12th. And then the following day, the stock market, the S&P 500, bounced about 9%. What do you think most of those put holders did? Do you think they held? I really doubt it. I bet they sold their puts for a significant loss and went crying to mama. And I bet they told all their friends, this is it. This is the bottom of the drop. We're not going to see the stock market go any lower. And lo and behold, the next day was down 11%. So what's that? What is that called? That's trading psychology. And that's what makes it so difficult when you look at a trend and it's a straight line down and you're like, well, duh, just buy puts. You buy puts today and it bounces 20% over the next week before continuing downwards. What are you going to do? Are you going to remain calm or are you going to sell? It becomes tough. That's where the trading psychology becomes such a difficult game. The technical analysis here isn't that big of a problem. It's obviously going down. It's a trading psychology that's going to mess with your head and make it difficult to make rational decisions. I think people are grossly underestimating the lack of clarity that is evident in the stock market today. People do not know what the economic impact is going to be. If they did, they would just price in the stocks really quick and we'd just be done with it. But nobody has any idea what the economic impact is going to be. And there's new news coming out every day about the spread of the coronavirus and the steps that the Fed and the administration are taking to combat it. So there's big swings as more news is coming in. That's good and bad. Good and bad. And people are desperately trying to price in what's the economic impact going to be. I don't know. Do you know? I don't know. Huh? Like they just don't know. So they're trying to price it in. You see these massive swings going all over the place. And that means that if you have a short-term position, you're going to be bonkered. If you have the big cojones to buy some puts and hold them, then maybe that's a good idea, but it's still going to be tough if things bounce in the near term. But you could also argue that buying calls for the long term is a good idea. Buy deep in the money calls. This is a dip that investors have been waiting for forever. But the problem is if it continues downwards at the rate that it has been, even if you buy a nicely in the money call for a year out from now, you may not see that money turn around for a long, long time. And the odds that you're going to hold for significant losses are, in my opinion, pretty slim. So because no one has any idea of the economic impact. No one knows what the right price for stocks should be. And so it's swinging all over the place as people try to search for it. So what am I doing during all this? Well, in my opinion, I don't have the cojones to decide to throw a bunch of money into puts. I don't have the cojones to buy long dated calls. Plus, I want to wait to see what the economic impact actually is once we get some economic data over the following months. But besides all that, I'm just straight in shares and cash. That's it. I'm not doing any trades whatsoever. I know my trading psychology, and I know if I had bought puts the day before an 8% bounce, I would have been one of those guys panic selling the next day. And I do not want to be caught up in the swing and the frenzy of it all and losing my mind and losing my sanity while I'm trying to stock up for the next couple of weeks because my grocery store is going to be out of food. It's not something I'm interested in. It doesn't sound like a really good time. In fact, I made this decision early on to be just in shares and cash. And I was very well aware that I was going to have some unrealized losses because I knew this was going to continue downwards, but I also knew I wouldn't be able to handle the trading psychology aspect of these wild swings and make money. I just wouldn't be able to. Even though I know that this is going to continue downwards, as soon as I see like a big, nice green bounce, I'm going to go, I can't, this is too much cheap. My puts premium dropped by 75%. And I'll probably just drop the puts because I'm so risk averse for the most part. Obviously not as risk averse as someone trading pure or buying purely SPY shares, but I'm still fairly risk averse. But don't take my word for it. Let me read something I said to my Discord member a couple weeks ago. So someone asked me if I thought that the market was going to continue to tank, and I'm just going to read a snippet of what I said. I said, I'm not trading for income, so there's no pressure for me to make money right now out of the situation. I would much prefer to take the less risky, less stressful route of buying while buying's cheap than to grab a bunch of puts and get kneed in the teeth when this bounces. That's just my preference, and it will probably result in some juicy unrealized losses in the short term, but it will be softer on my psyche. It's important to understand that your trading psychology is a big part of trading, and especially during times when you have these massive swings, is going to impede your efforts in making money. So it's going to be extremely difficult, at least for me, especially for those who are more risk averse. And as things kind of get worse and worse, and as I imagine most of the United States is going to be pretty much shut down and quarantined, you might see SPY continue in the downwards direction. And for those who are making good gains and who have big cojones or have made enough profits that they're not so concerned about future losses if things bounce, good on you. That's awesome. Not every trader is the same. Traders everywhere are just ridiculously different. But for me, I want to take this opportunity to average down, buy shares while they're cheap, and not have to worry about my brain literally melting out my ears through this volatility. So when people ask me in the Discord, on YouTube, whatever, when they ask me, hey, should I cut my losses here? Or, hey, should I take some profits here? What strikes are you going for? What? If I'm being honest, I don't have any, I can't tell you what to do. I might have an idea, yeah, the market's going down. But how could I possibly say buy puts if I myself don't have the trading psychology to cope with buying puts in such a high volatility environment? It'd be hypocritical in my opinion. So don't feel like you always have to make money. It's okay to take a break and set some funds aside for cash or shares or whatever and go play with your dog. Don't go see a movie. Stay at home, watch a movie at home. Don't go see a movie. Or maybe do. Maybe you'll be the only one there. Or do what I did and go watch Cats at midnight while you're drunk and there's literally nobody there. Oh my God. And it's not fun sitting here on a pile of unrealized losses, but it's much easier than realizing those losses and sitting with my head in my hands, just heartbroken over losing the hard money I've earned. So I'm just telling you all this because this is my thought process and this is my strategy in handling such a ridiculous downturn in the markets. So where are things headed? Probably down. I imagine this is going to be a significant impact on the global economy and probably result in a global recession. And I'm not exactly the type of person to jump in on that. I mean, I said in my message, I don't think I read it to you, but I said I didn't like the fear mongering in the headlines, but that fear mongering has low key become a reality. How well the stimulus packages and the rate cuts will cushion the impact of coronavirus is to be determined, as well as the economic impact of all of these manufacturing facilities and being shut down and workers staying at home. Everything's coming to a slow standstill, and that is going to impact the growth of our economy and the growth of the global economy. As a result, that means GDP growth rates could decline, and that would indicate a recession. And if it's a recession, so be it. It's a necessary evil for us to continue upwards in the business cycle. Be careful out there, guys. I love you guys more than life itself. I'll catch you in the next one.